Hello everyone, and thanks for watching Edupedia World Videos. In this session, we'll discuss about fund flow. Before we go any further, we'll have to understand what we mean by fund. Now fund here means working capital. And any change in this working capital is called fund flow. Now the change in working capital could be outflow or it could be inflow. So in other words, we can say that when change in working capital takes place because of a transaction, then it is called flow of funds. Now the next thing which we have to understand is when this flow of fund takes place. The flow of fund takes place only when there is a transaction which is having impact on current asset or liability and non-current asset and liability simultaneously. As we know that each and every transaction has two aspects, so we have to find out those transactions which are having the involvement of non-current asset or liability as well as non-current asset and or liability. So if I say like a machinery is purchased for cash, then we can understand that machine is a non-current asset and cash is a current asset. So there is a transaction between non-current asset and current asset. So there would be a flow of fund. Similarly, if there would be issue of shares in cash, so whenever there would be issue of shares, it would generate cash. Cash is current asset and issue of share is non-current liability. So there is a transaction between non-current and current. So there would be a flow of fund. In short, we can say current asset into non-current asset, or rather you write it this way. And non-current asset, current liability and non-current liability, current asset and non-current liability, and current liability, non-current asset. So in all of these four cases there would be a flow of fund. And if there would be a transaction between current asset and current liability, or non-current asset and non-current liability, there would be no flow of fund. Now, this is the brief idea about fund flow. We'll continue with the calculation of fund from operation with the help of an example. Just present it in front of the screen. So this is our question. And what we have to do is to calculate fund from operation. Before we understand fund flow in totality, we'll have to understand what is fund from operation, which would be helpful in both fund flow statement as well as when we prepare cash flow statement. So you can see the question, and I'll show you how to solve this question and how to calculate the fund from operation. So we'll start with the net profit. Now, before we start the calculation of fund from operation, I would like to explain what this actually means. The fund from operation means the actual flow generated because of the operations. Now, the net profit which we get in our profit and loss account, that doesn't account for the flow from operation. The operating profit reveals the excess of profit, or rather excess of sales revenue over the cost of goods sold. In true sense, it does not incorporate, or it does not represent the true or the exact flow of fund because of the operation. And because the revenue earned and expenses incurred are not in conformity with the flow of funds. For example, depreciation of fixed assets. Like whenever depreciation happens, we don't pay off any amount to anybody. So there isn't any flow of fund. There isn't any flow of cash. Similarly, in case of other appropriations, this happens. and this happens because they have already been charged to the profit and loss account, so they do not cause any flow of fund. So fund from operations tries to find out the actual flow or the actual inflow and the outflow because of the normal operation of the business. Now we'll try to solve this problem here. So we'll start with the net profit. And we will add all non-flow or non-fund, non-trading items which has already been debited to the account, to the profit and loss account. So we know the net profit, which was the closing balance of profit and loss account. It was 18,000. Mention 18,000. Then we add all non-flow or non-fund or non-trading items already debited to profit and loss account. So the first element that we have here is we have depreciation. So we write depreciation. The amount is 5,000. The next one is goodwill written off. The amount is 3,000. Now for both depreciation and goodwill written off, we don't pay anybody any amount, and we can also say like we don't pay from our pocket. So there isn't any flow of fund, and as this has been already debited, so while calculating the operating profit, we'll have to add it back to the net profit to understand the or to find out the flow from the fund. That is because of the operations, fund flow from operations. So the next thing we have here is loss on sale of plant. Loss on sale of plant. This is not the part of operation, means selling a plant is not part of your regular business operation. So any loss because of the sale of the plant needs to be added back to the net profit, and any profit because of the sale of the plant should be deducted from the net profit in order to calculate this fund from operation. So this is 2000. Next we have, next one is provision for taxation. So we write provision for taxation. The amount is 4,000. Now whenever we go for provision for taxation, provision for taxation can be considered as current liability, and this is not the part of your fund from this is not the part of your operation, I would say. So whenever you keep provision for taxation or provision for anything, and it may be called as current liability or appropriation from profit, so you have to add it back to the net profit in order to calculate the fund from operation. Next we had was interim dividend. So right, paying off dividend is also a kind of appropriation, and can also be considered as current liability. So this is not the part of operation again, so this has to be added back if it is a outflow. Now we'll add preliminary expenses. As it is beyond gross profit, so that is to be considered like it is beyond the operating profit also. Like preliminary expenses has been charged after the calculation of gross profit, which is the difference between the sales revenue and the cost of goods sold, and the operation or the operating profit is also very closely related to gross profit. So we'll add back preliminary expenses and the transfer to the general reserve. This is also not a part of operation. So the amount was 7,000. Now what we have to do is to subtract all those elements which has been added to the net profit and which is not the part of operation. So we'll start with profit on sales of investment. You can say non-fund or non-trading items already credited, to profit and loss account. So first we have profit on sale of investment. The amount is 2000. Now there is no element left, so we just calculate all these values. We have 18,000, for this we have 25,000. So there is a total of 43,000. If we deduct 2,000 from this, and we have 41,000 as our fund from operation. So this is how we calculate fund from operation. Hope this video helps you. Thank you for watching this video.